What up, Hyperchange? Welcome to another episode. Today we're talking about Amazon and the company's fundamental transition into a significantly profitable company. Amazon has been famous for operating on zero profits, running at break even, and just growing like crazy for decades since the company's IPO. But recently, in the past year, there's been a fundamental shift in Amazon's business where they are starting to pump out billions of dollars in profits and cash flow, and it looks like they're going to be sustainably profitable from here on out. And this has huge implications about the valuation of Amazon. Are they going to get valued on a PE basis like normal stocks? And we're also going to dive into what exactly is driving this change under the hood in Amazon's business. Why are they getting so profitable now all of a sudden? To start, we're going to do a ton of this episode in Hypercharts, which is the platform we've been working on. We've expanded it to already well over 10 companies. Awesome resource. You can just go to hypercharts.com if you want to check it out. And here we are on the Amazon page. And so the first chart here you see is revenue segments. So just real simply, we can see, Amazon, we'll break this down and just see what each is doing individually. You can see that Amazon's North America business, by far the biggest part and piece of the pie for Amazon, hugely seasonal in that in Q4, the holiday season, they have a huge spike in sales, and we can see very strong momentum in Amazon's North America business, hitting $44 billion in revenue. And if we look at the international business, we'll see a very similar trend, also seasonal. Actually, it seems like a little less growth momentum than Amazon's core overall, and we're going to talk about that more in a bit. That was about a $21 billion business as of Q4. And then the other piece of Amazon, the most profitable one, is AWS, and this is their recurring cloud business model, which is hitting, and it's, although its revenue is smaller, only $7.5 billion in Q4, it's incredibly profitable, and this is one of the most profitable pieces of Amazon's business. So that is what we have overall. Three pieces of Amazon business, all growing rapidly, firing on all cylinders on their own, and that is the cumulative reach of Amazon's revenue. Now, we don't have this on Hypercharts, but if we'll go to Amazon's press release for their Q4 earnings, they'll actually break down the operating income of each of these segments. And this is where the magic is happening, and you can really see the change. So if we look at the 12 months here ending for North America, they had $3 billion in operating profit, or a little under that in the full year of 2017. And in 2018, they posted $7.3 billion in profits. So the North American business, not AWS, we're not including AWS at all for Amazon, is already making $7.3 billion in profits. So Amazon's core retail business that used to run at break even is now becoming incredibly profitable. I mean, growth from $2.83 billion to $7.3 billion is huge numbers. And then if we move down a little bit here to international, you can see that the international business, this is their big money loser. This is where they've historically been investing, and it's burning a ton of capital. But even that business, their losses improved dramatically from about $3.1 billion to just $2.1 billion in 2018. So even the international business is getting more profitable by the day and trending towards being profitable on its own right. The third piece of the business here is AWS, and we can see that this, only $25 billion in revenue versus $141 billion in revenue for North America. Yet AWS did almost the same, actually a little bit more in profit, $7.3 billion. So now if we scroll down to the revenue and operating income chart, you can really get a sense for just how all of this is unfolding. If we zoom in on just the operating income line, we can see that Amazon has now been consistently profitable going all the way back until 2014 Q3. So like 4 years ago was the last time Amazon actually lost money. So I would argue they're consistently profitable, and it looks like very strong growth in this number. And I think part of this, Whole Foods was a very profitable company when they acquired it. And so I think that has been a huge driver of the revenue and operating income as well. And so now we see Amazon for the past 2 quarters has posted 3.8 billion in operating income. We're looking at a company that's doing, almost $15 billion annually in operating income run rate right now. So now Amazon's profits are material, and we can start analyzing them, relative to other companies. And this is what I think is such the interesting question to me. For so long, Amazon's been valued on operating cash flow, price sales, because there's been no earnings to look at. Now we have earnings to look at. They're doing it at about a $15 billion run rate now. It seems like continuing to grow rapidly. And so now we can get into valuation multiples. With a market capitalization of around $800 billion, we're looking at a price EBIT ratio, if using that 15 billion number, of about 53 times. And so now we actually have a sort of normalized price earnings ratio of Amazon, which is super fascinating. And what's even more interesting is, I think, in the guidance of their Q4 2018 letter, is they said that growth is expected to slow to just between 10 to 18% in Q1. And so a lot of things going on under the hood here. And one more thing I did want to highlight on Hypercharts, though, was a different way that Amazon breaks down its revenue, which is, it still has AWS, but it's like physical stores, third-party seller services, online stores, subscription services. I mean, this is fascinating because it kind of shows you, actually, if we just zoom in here to online stores, you'll see once again, Amazon, this is their online store business. They didn't start reporting this till 2016 as far as I could tell, so that's why the data doesn't go back the whole way. But we have, online stores, strong business there. If we go to the third-party seller services where they let other merchants on their platform, this business also seasonally strong in Q4, doing really well. The physical stores business, this is the Whole Foods business, Amazon Books, and Amazon Go. And so this is a really interesting piece of Amazon's business line, the online retailer building physical retail stores, and it hasn't really been growing at all. And I think they're sort of in this transitional period of optimizing and managing Whole Foods, which is still the bulk of that revenue, which is hiding huge growth among Amazon Go, which now has 9 stores open, Amazon Books. And so I think this is a really fascinating revenue line that I'm going to continue to watch for a long time to come, which is what is happening with physical stores. I think this could be the huge new growth driver for Amazon, mainly on the back of Amazon Go and like growth in Whole Foods. And if we go to AWS, this is, the same revenue line that we saw in the other chart. They also break out AWS on its own in this view. Then subscription services. This is an interesting piece of Amazon business, which I think is a bright spot. Think of this as like Apple's service revenue. They're a services company. This is things like Amazon Music, Amazon Video, Amazon Prime, all these recurring SaaS subscriptions that are layering on top of Amazon's business model. And that now is almost a $4 billion business as of Q4 2018. And then the last piece of this business is other revenue, which is almost exclusively advertising revenue. And part of this growth that looks absolutely insane. I mean, this business is growing insanely fast for Amazon. I made a whole business on just their ad business, but I made a whole video just on their ad business. But important to note, they did overstate, or due to an accounting change, they added an extra $1 billion in revenue in Q4 that wasn't there in Q4 last year. So it really grew organically from 1.7 billion to 2.4 billion. So a lot less growth than it actually looks like, but that's just the change in accounting. At the end of the day, Amazon's ad business is 3.3 billion. That's almost a 13 billion dollar business on its own for advertising. And so when I think about the growth drivers of Amazon, I think this advertising business has huge potential. I think the subscription service businesses, huge potential. AWS is the behemoth. We all know that, huge potential. Physical stores looks boring now, but will continue to scale as Amazon Go hits its stride. And then of course, the third-party seller and online store business are Amazon's core fundamental e-commerce business. Still, e-commerce is still like 10% of US retail sales. I think there's a long runway for this part of the business to grow as well. And so moving down though, the real operational change here that I think is how this is all playing out is in Amazon's gross margin structure. Over the past 4 to 5 years, we've seen gross margins trend from, the high 20% range to now in getting into the high 30% range, even, over 40% in certain quarters. And so Amazon's gross margin trajectory is on this clear uptrend, and that has kind of been driving their profit margin improvements. And so as they scale, as they layer these higher software recurring business models on top of Amazon, their gross margin continues to increase as they hit scale. And another last thing I want to point out is Amazon's cash flow cadence is super interesting. This is one of the reasons I love hypercharts. You can just really get a sense for what's going on under the hood here, the way that their cash pile gets way bigger in Q4 when they collect all the holiday stuff, and then it goes way down as they kind of build back inventory, and this is just sort of the cadence of Amazon's cash flow. But the point is, they're making a ton of cash, and if we scroll down to their actual cash and short-term investments chart, you can see Amazon is now piled up 40 billion plus of cash on its balance sheet. So now begs the question of where are we looking at Amazon going from here? And this is the gist of why I wanted to make this episode. Now Amazon is at this point of, okay, we're making 15 billion a year. We've got 40 billion in the bank. We're no longer this break-even startup. They're really hitting maturity. And so I wonder, A, what the market is going to do to potentially change the valuation of Amazon. For now, it seems like it's been the same. They don't really care, but are we going to switch to the market viewing Amazon as more of a slow growth sort of legacy tech company instead of an innovator, now that A, they're profitable, and B, their growth rate has gone down to potentially below 20% going forward. So lots of interesting stuff going on at Amazon. And the other thing I have to think about this is, what move are they going to make with all this cash? Amazon has 40 billion in the bank, and they're only adding a ton more to that each year or each quarter. And so I think at some point, Amazon is saying to you, the fact their cash is piling up on their balance sheet is like, we don't have any more good ideas to invest in. Like, we don't know. If we could spend money, we would. So it's interesting to see that now this cash accretion is accumulating on Amazon's balance sheet. Anyway, that is my wrap up, in-depth financial analysis of Amazon. Would love to know what you guys think in the comments below. What do you think of this transition? Do you think 53 or 50, 55 times EBIT is a fair price for Amazon growing at this rate? Would love to know in the comments below. This is Hyperchange. Huge shout out to all our Patreon supporters, producers, funding the channel. I'll see y'all next time. Peace.